So on Friday, I was sitting in a team meeting with Markus, and oops, I found a wheel strategy trade that I wanted to take. This was Airbnb. I let Markus know he took the trade as well. And in this video, I want to share why we took the trade, but also what our exit plan is once we get into a trade. So by watching this video, you'll have a better understanding of the wheel strategy, but also how we plan our exits. Let's take a look at the chart. So on Friday, I was using the wheel analyzer in PowerX Optimizer and the wheel scanner settings for identifying trades. With these settings, I'm looking at a min strike at or below the lowest close indicator, and the lowest close indicator was 118, so we actually had the 118 and 117 pop up. I have things set for dividends all. I like stocks with dividends with the wheel strategy, but it's not a requirement for my plan. I'm looking at stocks that have a market cap that is greater than or equal to 2 billion. PE ratio less than 50 is ideal. Sometimes I'll pop that up to 100, but this would be Markus's setting that he uses, less than 50 for the PE ratio. Change in percent set for any sector is all. Expiration. It depends on the day of the week. I might look at this Friday's expiration or both this Friday and next Friday's. I have my filter set for a strike that is greater than or equal to 15, and the ROI that I want to see on that option based on the duration that option will be held potentially needs to be 30% or greater to make the risk for taking that trade make sense. I also have my premium set. I want to collect a minimum of 10 cents on that put. Drop in percent is any, and I do take a certain type of setup going into earnings, but for wheel strategy trades, I want to make sure that earnings are not occurring before the expiration that I'm considering. So looking at Airbnb reported earnings and actually opened up on Friday higher and then pulled back. So as it was pulling back and approaching the support level, I saw that the 117 strike was available. I decided to sell the 117 strike and I was able to collect $2. So it was a stock that I was interested in owning, and it was a price, 117, that I was interested in owning the stock at. Instead of just buying the stock, I sold that put, which means I could make money if the stock goes up, if it goes up a lot, if it goes nowhere, if it drops a little because the stock was trading above 117, and if it drops more and lower than 117, I'm the proud owner of Airbnb, but I was able to collect $2 before owning those shares. Now, when it comes to the exit strategy with the wheel, you can just hold that put until expiration and let it expire. If the stock's above the strike you sell, then it expires worthless. If the stock is below the strike you sell, now you're the proud owner of those shares. I also have two other rules. One is an 80% exit rule. The second is a 90% exit rule. Now, with my rules, my 80% exit would take place same or next day after entry. My 90% exit comes next after it. So if I can't exit for 80%, I will adjust to 90. And then on Friday's expiration, if I can't exit for 90, I will let this expire or get assigned. Now, what does this 80% exit mean? Well, if I sell a put for $2, which I did in this case, I collect $200. And the collection of that premium, what I sold the put for, that is the most money I could make on this trade. So $200 is the most that I could make on this trade. So an 80% exit is going to be 20% of this premium. So I could multiply 200 by 0.2, and this means that my 80% exit was $40 or 40 cents. So if I exit at 80%, then this means that I've collected $1.60 or $160. Now, if it were possible to have collected or to exited let me make sure this is spelled correctly. That's going to drive me crazy. If it were possible to close this at 40 cents on Friday or Monday, like I said, the same or next day after entry, then I'm all for that, because the most I can make on this trade is $200 for every put sold. And the best case scenario is on Friday, the put expires worthless, and now I've collected that full $200. I get paid the $200 up front, but it's not officially going to be the profit I've made on the trade until the put expires worthless. Or if I get assigned, then that credit is all mine. So if I could close this and collect 160 and be done with the trade on the same day or the next day, I'm all for that, because I'm only able to get another $40, and that would require holding it until expiration. Now, once that criteria hasn't been met, then I go with a 90% exit. And in this case, a 90% exit is 20 cents. And it's the same thinking. If I could close this at 20 cents, then I've made $1.80 or $180 for every put sold. There's only 20 more cents to make. And in fact, I want to say that we closed this on Tuesday. So on Tuesday, we were able to close this for 20 cents. We locked in that $180 profit when 200 was the max that we could get. So with Friday, Monday, Tuesday, just 3 trading days, we got 90% of the maximum profit. And that meant that we didn't need to hold the trade for another 2 days, where anything could happen. The stock could drop. If it did drop and we got assigned at 117, I'm okay with that, because I wouldn't have taken the trade if I wasn't okay with it. But why not close this for most of the profit that we could realize anyway, be done with the trade? And that's exactly what we did. So we're out of the trade. Airbnb was a good one. And I hope that this discussion on exits makes sense. Just for clarification here, on Friday expiration, if on Thursday at the end of the day I've not been filled on the 90% exit, then I just cancel my order and I hold it. I have the put open on Friday, and I either get assigned or I let it expire worthless. So this is why I took the Airbnb trade and how to use different exit rules when trading the wheel strategy. If you like this video, please give it a thumbs up and please subscribe to the channel. I'm also curious, did you take the Airbnb trade, or were there other trades that you identified using the wheel scanner? If so, post them in the comments.